Good day everyone, and welcome to our 2022 annual investor letter. What an interesting and difficult year we've seen in 2022. On the one hand, we're very pleased that our funds delivered double-digit returns for investors for the year, but on the other hand, it was the worst year for markets since the global financial crisis in 2008, with the S&P 500 and MSCI World Indices both ending the year down close to 20%. I'd like to reflect back on what drove the decline in markets in the past year, and also then give you some indication of how we're thinking about 2023 and positioning the portfolio. The main story of 2022 was the return of inflation. The world hadn't really seen any significant inflation after the last big wave that ended in the early 1980s. And for the last 30 or 40 years, the monthly inflation data coming out of the US and Europe was really a non-event that wasn't particularly interesting to the markets. This all changed in 2022, with inflation being the main narrative that drove markets. And the big days of the year for markets was typically the days of the inflation releases and then the days of the Federal Reserve interest rate meetings. Inflation then peaked in the US in June 2022 at about 9.1%, and it has been steadily drifting down to about 6.5% from here. So at least it's a good thing. We've most likely peaked. The other key variable driving the market last year was the Russia-Ukraine conflict. It was most significant early in the year, in Feb, March and April, and unfortunately the human cost is significant and the war is still continuing, though the impact on markets is now reduced. The world has learned how to live without Russian gas, and even the oil and coal markets have largely adjusted to less Russian supply being around. Given this backdrop and these events we've had to deal with, we're very pleased with the outcome of our funds and that we could deliver low double-digit returns for investors. As a hedge fund, our goal is exactly that. We need to find specific bottom-up ideas that delivers great returns for investors regardless of the overall market backdrop. Ideas that will perform whether markets go up or go down. That's how one generates consistent, strong returns. 2022 was a very successful year in that regard, and we give you some insight into two of our bigger positions during the year, Thungela and OUTsurance, in the annual letter. If I move now to looking ahead at 2023, we think the focus for markets will change. Global central banks have hiked interest rates significantly from basically zero at the start of 2022 to about 4.5% in the US right now. We know that monetary policy and interest rate increases have a lag. They typically take 6 or 12 months to impact the overall economy. So what we've got now is rates going up very aggressively, one of the most aggressive hiking cycles in history, and we're now in that 6 or 12 month period where these interest rate hikes will start impacting the overall economy. So it will be an absolutely key thing to watch in 2023. How significantly do economies slow down, and can central banks pause and stop their hiking and potentially reduce rates in time to create a soft landing? Our portfolio is very well positioned for this kind of environment. We've been conservatively positioned for most of 2022, running significant excess cash balances while we wait for opportunities. We've started to deploy some of that cash in recent months into some interesting specific bottom-up ideas, and we are ready for 2023. We believe a slowing economy and volatile markets will provide us with great opportunities to deploy cash into markets, and that will lead to continuing to deliver excess returns for investors. So finally, we want to thank our clients for being the long-term investors that they are and for trusting us to grow your wealth. We will never take that trust for granted, and we will do our very best to ensure that we continue to deliver consistent returns for you in the years to come. This year also marks our 25th year of performance for clients. The business was started in 1998, so it's a big year for us as a business, and we look forward to speaking to you more about that as the year progresses. Thank you.